You know, some companies evolve. Others, they spark full-blown revolutions. But what Tesla is planning for 2026, well, that's something else entirely. It's a calculated, total reinvention that could literally reshape our world. So let's break down this incredibly audacious master plan, piece by piece. So that's the big question, isn't it? How does a car company even begin to think about tripling its value in just 2 years? We're not talking about a little bump in sales here. This is a plan for a fundamental transformation, one that hinges on a future that a lot of people still think is pure science fiction. Just look at that number, $2 trillion. That's the valuation some analysts are seriously predicting for Tesla by the end of 2026. To put that into perspective for you, that's more than the entire economy of Canada. And let's be real, you just can't get to a number that massive by selling cars alone. No way. So, okay, how do they get there? What's the secret sauce? Well, it isn't just about bending more steel or packing in more batteries. The real secret is this huge pivot. It's a strategic shift. They're moving from being a car company to being an AI and robotics company. The value isn't just in the car anymore. It's moving to the brains, the intelligent software that's running the whole show. And this chart right here, it shows you exactly what that pivot looks like in dollars and cents. I mean, check this out. In 2025, the projection is that 85% of Tesla's money comes from, selling cars. Pretty standard. But then, just 1 year later, that number is expected to plummet to just 20%. Why? Because the robotaxi network and the Optimus robot are projected to make up a whopping 75% of their revenue. This isn't just a change, it's a complete teardown and rebuild of the company's financial identity. And the reason they're making this massive shift? It's really simple. It's all about profitability. Look, building and selling a car gets you a gross margin of around 18%. That's not bad, but the projected margin on autonomy and robotics, a staggering 60%. Think about that. Every single dollar they make from these new ventures is more than 3 times as profitable as a dollar from selling a car. That is the financial engine that could rocket them to that $2 trillion number. All right, so let's dig into the first major pillar of this whole plan. We're talking about the robotaxi network. And this isn't just some new software update for their cars. No, this is an entirely new business. And it's built around a brand new purpose-built vehicle called the Cybercab. So this thing, the Cybercab, it's not a car you go out and buy for your family. In fact, it doesn't even have a steering wheel or pedals. It's basically a purpose-built appliance designed to do one job on the Tesla network. And get this. The target cost to build one is just $25,000 to $30,000. It's designed from the ground up for one thing and one thing only, autonomous ride-hailing. And the numbers behind the Cybercab are, well, they're the core of this whole strategy. So each one of these vehicles is projected to bring in about $30,000 in revenue every single year. After you pay for charging and maintenance and all that, you're left with about $20,000 in gross profit per car, per year. I mean, at that rate, the vehicle pays for itself in under 2 years. And then it just becomes a cash-generating machine for the network, day in and day out. But of course, having a profitable car is only half the story, right? The other half is scale. You've got to build a ton of them. And Tesla's plan is wild. They're looking to start with a 50,000-unit pilot program in 2026. Okay, but then they want to ramp up to 500,000 the very next year, and then 2 million cars by 2028. The speed of that industrial scale-up it's almost unheard of. And to really get a sense of how disruptive this could be, just check out this comparison with a company like Uber. Tesla's projected cost per mile is just 20 cents. Uber's is around $1.50. That massive difference in cost means Tesla could be looking at a 67% profit margin. Compare that to Uber, which has historically operated at a negative margin. By taking the driver, the biggest cost, out of the equation, Tesla completely flips the economics of ride-hailing on its head. Okay, so the robotaxi network is already a huge, massive project. But believe it or not, that's only half of Tesla's big AI play. The second pillar is, and I'm not exaggerating here, even more audacious. We're talking about a mass-produced humanoid robot named Optimus, and its goal is to completely change the very nature of physical work. We're looking at the 3rd generation of Optimus here, and this is the one that's supposed to be a real, viable commercial product. The target price is just $20,000. It's projected to have 95% of the dexterity of a human hand, and it can work a full 8-hour shift. But the most important part? It doesn't learn because someone coded a bunch of rules into it. It learns through an end-to-end neural network. Basically, it's an AI that learns from watching and doing, just like Tesla's self-driving cars learn from road data. And just like with the Cybercab, the production plan for Optimus is, well, it's incredibly ambitious. The idea is to build 100,000 of them in 2026, but just for their own factories, to prove they work, to eat their own dog food, so to speak. But then, just 1 year later, the goal is to crank out 1 million units for sale to anyone. To go from an internal tool to a global product in a year, that's just moving at lightning speed. So you might be asking, who's going to buy 1 million humanoid robots? Well, the potential market is just enormous. We're talking about the total addressable market, or TAM. For factory automation, that's a $500 billion market. Warehousing, another $200 billion. But the really big one, the holy grail, is home services. That's estimated to be a staggering $1 trillion market. The potential is just immense. So you've got the Cybercab and you've got Optimus. Both of them are powered by some really advanced AI. But here's the thing about AI. To get really, really good, it needs data. A massive, almost unbelievable amount of real-world data. And that brings us to the third and final piece of this puzzle, the foundation that this whole grand plan is built on. And that foundation is the so-called Model 2. Its whole mission is simple: achieve mass market dominance. We're talking a $25,000 price tag and a plan to build 2 million of them a year. The whole point is to get Tesla's tech into the hands of as many people as possible. Because every single one of these cars will come with the latest full self-driving hardware, turning each car on the road into a little data-gathering robot for the entire network. Okay, so let's recap. We had the Cybercab network, an Optimus robot workforce, and the Model 2 flooding the world with data on an unprecedented scale. So now, let's tie all of this back to that mind-boggling $2 trillion number. How on earth could the market possibly justify a valuation that high? All right, so why would an investor pay such a massive premium for Tesla stock? Well, let's look at the numbers. The company's projected price-to-earnings ratio for 2026 is 100. Now, the average for a big company in the S&P 500 is only about 22. So what gives? The answer is one word: growth. The market isn't looking at what Tesla is earning today. It's betting on its projected growth of 108%. Essentially, when you buy the stock at that price, you're not buying the company as it is, you're buying a piece of what it could become. But let's be super clear. This $2 trillion valuation is far, far from a sure thing. It all depends on hitting a series of really critical milestones. You can think of it like a checklist. Analysts are watching 4 key things, 4 catalysts. 1, they have to actually start building the Cybercab. 2, they need to get regulatory approval for unsupervised full self-driving. That's a big one. 3, they have to launch the Model 2 on time. And 4, they need to get Optimus robots working in their own factories. Any one of those is a huge challenge on its own. And that really brings us to the reality of the situation, doesn't it? A plan this big, this revolutionary, it's just an enormous gamble. The potential reward is off the charts, but the risks, they're just as big. You can pretty much break the risks down into 3 big buckets. First, there's financial risk. That's actually considered pretty low just because Tesla has a huge pile of cash. Then there's execution risk. Can they actually build all this stuff? That's probably a medium risk. They've definitely had some bumps with production ramps before. But the biggest one, the one that's rated as high risk, is all about regulation. Getting the government to sign off on cars with no drivers and robots working alongside people, that is the single biggest hurdle they have to clear. So there you have it. That's the plan. It's a vision to morph a car company into a true AI powerhouse, one that could redefine transportation, labor, and maybe even the fabric of our economy. And it all leaves us with one final massive question. Are we watching the blueprint for the world's first true 22nd century company? Or is this just the biggest, most audacious gamble in the history of industry? I guess we'll find out, because the next 2 years are going to tell the whole story.